Welcome to our economic and market outlook for 2017, which we've entitled The Times They Are Changing. And certainly when we look back at 2016, we believe there was a real inflection point reached. We saw a move towards more populist political parties away from the incumbents. But we also saw the central banks back away from negative interest rates, which we thought was a positive, and even the governments themselves speaking a little bit more about fiscal initiatives to bolster economic activity. So when we look to 2017, we've got a number of key messages. The first is that we do think that global economic growth will be marginally better in the coming year. And that's going to be led by a synchronization between both developed and emerging market economies. The other thing is that we do believe bond yields and inflation itself has actually bottomed. But we think the pace of that recovery, the pace higher, will be very gradual over the coming years. Now, Charlotte, these sound quite significant changes that we're talking about, but what does this really mean in terms of the underlying economic activity that we're expecting for this year?
Well, you have this operating environment which hasn't really changed and is one with low growth, low inflation and high debt level. So the change that we've seen on the margin could be positive for the global economy, but the structural background is still the same. It's this environment that hasn't changed. And on top of that, of course, we have political changes that are unpredictable. So what's our view on this political outlook for the coming year?
I think 2017 is going to be critical. We still have to see the impact of Brexit. Article 50 we think will be triggered, and we do think that will have an impact, slowing growth a little bit in terms of the UK and the Eurozone. But I think what's going to be fascinating is what does President Trump do? How does he enact some of these policies that you mentioned? We think the fiscal side could be interesting, though it's likely to be watered down somewhat from the numbers that he's been discussing. The tax reforms clearly also very useful. But we have to remember this is an economy that's already doing fairly well. Unemployment has fallen to only 4.6%. Inflation has moved up towards the Fed's target. So there is a little bit of a danger here that this is coming quite late in the day and could show signs of becoming a little bit inflationary as we go into 2017.
So do we expect this to push the Fed into tightening much quicker?
Well, I think that's certainly a risk. I think that the Fed, we do believe, is going to start moving again in December. And if there is a better growth than that coming through, I do think they'll be a little bit quicker to move rates higher. But they're very conscious of the fact that the dollar has been so strong over the last 12 months or so. And that will be a concern for them going forward.
Yeah, and for the global outlook, this strong dollar is a key factor. What is different this year compared to the last few years is that we both have emerging markets and developed markets actually participating in this better growth. And emerging markets, as we know, they are vulnerable to strong dollars.
So the dollar's
it is a
pivotal
key
on that
risk.
front, yeah.
Yes, it is a key risk. Another key risk would be around the banking system, which is still very large and still has unresolved issues. So how do you see that over the coming year?
Well, that's certainly the case in Europe. I mean, I think the US banks and other parts of the world have been in better shape. But clearly in Europe, the banks are still, or the area is still overbanked. I mean, banks represent round about 300% of GDP. The banks, frankly, have been slow to raise additional capital. Capital buffers are relatively weak. So I think that is a key vulnerability. One forgets there's still huge interlinkages across the financial sector between these banks, not just within Europe, but across the global environment. And of course, have also got very large exposures to many of the peripheral bond markets are there. So I do think that the European banks are worth watching in 2017. There is a risk that that is a key vulnerability going forward.
So turning to financial markets then, what does this mean for risk assets?
Well, I think, risk assets, we still think they're in this bull track, but I think there's a fundamental change. Up until now, the last sort of 7 or 8 years has seen a liquidity tailwind. Central banks have been providing abundant liquidity. This has lifted all asset classes together. And I think there has been a fundamental change there. With the Fed moving rates higher, with the ECB beginning to taper, I think it comes down to fundamentals. So we need to see earnings growth coming through, and that is required in order to get equity markets to remain in this bull track, and frankly, for the credit markets to remain so as well. So there's a number of risks around there, and we do expect volatility to be higher. But a key element, of course, of this move higher has been the bond market. So bond yields will be critical 2017, right?
Yeah, so we already seen a sharp sell-off in bond markets, of course. Yields have moved up very rapidly. And really that's a normalization after the very extreme levels that we saw last year. So critically, will bond yields continue to move up at this pace? No, we don't think so. And that comes back to that operating environment. When you have those debt levels and you still have low inflation in most regions outside of the US, this prevents bond yields to move rapidly higher over the near term. Over the longer term, we maintain our view, the bond yields are too low and they will move up gradually over time.
So the outlook for 2017 does acknowledge significant political change that is afoot, but we don't see that really manifesting itself in a significant alteration in terms of our economic and market outlook. Still think that equities and credit can go higher, but the operating environment will be very volatile. So we do hope you get a chance to look at the detailed report titled Times They Are A-Changing, where we go through each individual country and region, and that's now available on the Zurich.com website. Thank you very much.